Hey, welcome back everyone. This is Uncle Frank and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, let's recap the week starting with Yahoo Finance. US stocks fell on Friday as more details over a global IT outage trickled in and the major averages failed to recover from a sell-off that saw the Dow snap a run of wins. The S&P fell 0.7%, while the tech-heavy NASDAQ declined 0.8%. Both the NASDAQ and S&P posted their worst week since April. The Dow Jones slipped almost 1%. Stocks fell after a wobbly handful of sessions that saw a dive in tech, with AI-focused chip stocks bearing the brunt. Investors are rotating out of the tech heavyweights that have fueled the recent rally and into small caps, seen by some as benefiting more from interest rate cuts. But if you're one of the heavily shorted small cap issues, AMC, HYMC, GME, Archer, Mullen, especially on options expiration Friday, I don't care how good your headlines or fundamentals are, they all got pushed down. The predatory short hedge funds needed that sell-off and are now flush with liquidity, so holding or pushing down their short positions just got back to normal in my opinion. Gold set another record high this past week, but finished Friday's session at 2402.80, down 2.18%. Oil finished down 3.1%, but held on to 80 at 80.25. So before we proceed, let's devote a minute or two to this global IT outage thing. Was it a swan event? Maybe not for apes, but definitely for some people out there. If you desperately needed big tech to sell off because you were short, this was a welcome swan indeed, am I right? From Bloomberg's evening briefing. In what may go down as the most spectacular IT meltdown the world has ever seen, a botched software update from cybersecurity firm CrowdStrike crashed countless Microsoft Windows computer systems all over the world, idling airlines, banks, hospitals, and even the London Stock Exchange. For several hours, bankers in Hong Kong, doctors in the UK, and emergency personnel in New Hampshire found themselves locked out of programs critical to keeping their operations afloat. There are precedents for such outages. In 2017, a series of errors with Amazon's cloud service affected the operation of tens of thousands of websites. In 2021, issues at content delivery network Fastly took out several media networks. Disruptions also incapacitated Amazon's AWS cloud service. But none of those approached the scale of the CrowdStrike outage, whose repercussions are still being felt. Quote, I don't think it's too early to call it, Australian security consultant Troy Hunt said in a social media post. Quote, this will be the largest IT outage in history. If you take anything away from this incident, let it be this. CrowdStrike outage affects Schwab, E-Trade, and other brokerages, preventing people from trading. A global Microsoft and CrowdStrike issue is causing technical problems at some brokerages, while others seem to be fine. Was this a dry run, guys? This illustrates exactly how fragile this entire system is. One glitch at CrowdStrike, and airlines and brokerage firms are suddenly shut down. There's a huge sell-off in tech, erasing what, $1 trillion in market cap? I bet that helped people short Tesla and Nvidia. What do you think? My subscribers know I predicted a 30% chance of a swan event before the Fed meeting in September and a 50% chance of one before the election in November. So let's follow the money, shall we? CrowdStrike shorts won big after stock's outage fueled plummet. CrowdStrike short sellers gained after the cybersecurity company sent out a defective update, causing a global tech outage for Microsoft's Windows hosts. The outage sent shares down more than 11% on Friday. S3 Partners said CrowdStrike shorts were the big winners of Friday's incident, gaining more than $373 million in midday mark-to-market profits. So, Uncle Frank, who holds the big short positions against CrowdStrike? Can you look it up for us? Come on, guys. You know who's short. Susquehanna and Citadel. On this slide, we will cover two of the big swan risks that are related: commercial real estate and unrealized losses on investments in the banking system alone. This doesn't include the unrealized losses tied to the Fed itself. This is just the tip of the spear. CRE losses could expose these banks to liquidity risk. 7 banks with more than $100 billion in assets have an uninsured deposit ratio greater than 50%, with growing concerns about unrealized losses on investment securities and commercial real estate loans. The risk of a depositor run on banks, similar to what crippled 3 banks last year, grows each day, according to an analysis from a finance expert at Florida Atlantic University. A large percentage of banks with more than $1 billion in assets reported a ratio of uninsured deposits to total deposits of greater than 50% during the first quarter alone. Banks that report a ratio greater than 50% are considered to have an elevated risk of a run by uninsured depositors. Let me put this in context for you. If you applied for a mortgage with these same banks and your debt ratio exceeded 50%, your chance of being approved for that mortgage is reduced exponentially. Now, out of the 1,028 banks with more than $1 billion in assets, 94 had a ratio of 50% or higher. About 7 of 33 banks that had more than $100 billion in assets are above that threshold. Topping the list of banks with a 100% ratio of uninsured deposits was the Bank of New York Mellon. 100%, guys. State Street Bank, 92.6%. Northern Trust, 73.9%. Citibank, 72.5%. HSBC, 69.8%. JP Morgan Chase at 51.7%. And US Bank at 50.4%. That means put the Bank of New York Mellon on your radar. Now, who remembers the New York Stock Exchange list of threshold securities? Remember, we used to count the days AMC was on the list? What do you see now? Only 5 entries on the list. All of them are ETFs, not a single stock. What does that tell you? Looks like the predatory short sellers have got their mojo back to me, at least in the large cap space. Or maybe the SEC just isn't reporting some of that information anymore. Hey, Wall Street, tell me you're scared without saying you're scared. GameStop short squeeze predictions fall flat without Roaring Kitty. It's been over a month since the meme influencer Keith Gill posted on Reddit. GameStop fans are still hungry for a historic short squeeze. I believe Roaring Kitty and possibly even Ryan Cohen were warned by the powers that be about any antics or shenanigans that could put brokerage firms, clearing firms, hedge funds, even prime brokers at risk ahead of the election. This whole place centers on what Ryan Cohen will do with the $4 billion war chest. That's it. Start a new business or buy some new businesses, right? AMC's future may also depend on this forthcoming announcement. So that's why I think it may take some time to come forward. I could be wrong, and I hope I am. What I want is what every meme stock trader wants: a surprise announcement that results in a short squeeze for GME, AMC, maybe even the whole meme bucket of heavily shorted and manipulated stocks. I don't know if we're going to get that, because if Ryan and or Keith were threatened with delisting GameStop if they try anything cute, we may have to depend on a different swan event to produce that result, not investment advice or advisor. GameStop closed at $24.97, down 91 cents or 3.516%. What this asshole, Andre, doesn't want to mention is GameStop is trading above its 50-day SMA, 2605, above its 200-day SMA, 1763. It may have lost 4.15% for the week, but is up 139.64% over the past 3 months. Hey, Wall Street, tell me you're scared without saying you're scared. From Seeking Alpha, AMC Entertainment, deconstructing the financials and outlining why the deck stacked against it. AMC declined 93.64% since 2022 with limited upside potential due to financial struggles and competition. Okay, so AMC closed at 501 on Friday, down 9 cents or 1.765%. What the article doesn't mention is it's trading above its 50-day moving average of 494, trading above its 200-day moving average of 432. It did lose 4.75% for the week, but is still up 4.16% for the month and 58.54% over the past 3 months. But the onslaught continues from Investor Place. Why meme stock AMC could plunge much further from here. Well, I know why you're scared, Wall Street. Even Forbes knew you were screwed 2 weeks ago. Will Deadpool and Wolverine break box office records? Marvel film could snag 2024's biggest premiere, report says. That's right, unless Adam drops another dilution bomb or uses the results from our recent lender negotiations to skunk the stock, Wall Street is fucked. And I'm going to tell you which days have the highest probability, in my opinion, to mess up our enemies when I get to the calendar. Not investment advice or advisor. That's right. Deadpool and Wolverine weekend could turn out to be the biggest cinema event of the year for AMC, Cinemark, IMAX, and Wall Street knows it. So before we get into the analysis, let's check the most shorted stocks on the New York Stock Exchange. I went to the Yahoo screener, set the filter, price intraday greater than $1, average volume over the past 3 months greater than 200,000, exchanges set for the New York. I see 2,848 results. Let's take a look. So here's the results, and here's the dilemma for the Wall Street short sellers. Why is Cinemark listed in the top 25 most shorted stocks on the New York? It's ranked 12th. I thought Cinemark was Wall Street's darling. Look at these recent headlines. Forget AMC. Buy this entertainment stock instead. That's from NASDAQ. And Investor Place. 7 entertainment stocks that are way better buys than AMC. And then the street. Forget AMC. Another movie theater stock may see a short squeeze soon. Maybe they're right. How many apes have told me Cinemark is up because institutions own it and retail owns AMC? AMC is ranked 26th on this list. Why does Cinemark have nearly twice the market cap of AMC? Well, I'll tell you why they're shorting CNK, but saying it's still better than AMC. It's because it's not enough to keep AMC alone under control anymore. They're going to need to keep the entire sector under control, especially with the headlines that could possibly be coming out soon. By the way, Archer Aviation is also listed in the top 50 most shorted stocks on the New York. It comes in at 46. It has never made a dime, but also has a larger market cap than AMC. I just want to go on record now as saying Archer will turn out to be the dumbest short by Wall Street of the year. Mark my words. So what dates are important coming up for AMC in particular? Well, first we'll get the headlines from the premiere on Thursday, July 25th. Advanced ticket sales, etc. And that's a day ahead of options expiration day, right? Then on Friday, the movie officially drops. So we'll have the entire weekend of box office reports. Then on Monday, the most important day in my opinion, a day before the Fed meeting, we will hopefully get all the headlines surrounding the weekend being the best of the year, how many millions visited the theaters, possible record concession sales, merchandise sales, how the theater industry has finally turned the corner, how the pandemic and the strikes are actually behind us. You see, this movie's a little more important than you thought, and on and on. Now, this will be a big weekend for the entire industry and entertainment sector, Cinemark, IMAX, Disney, because they own Marvel, and so on. So the risk involved is Adam could always dilute. Adam could release negative results from our recent lender negotiations. Wall Street will be spoofing, layering, and depending on, the limit up, limit down committee to keep them safe with halts. This is primarily why I root for swans to land in the middle of time windows like this to create problems for the hedgies in other areas besides the meme space. Okay, so let's do the calendar. Countdown to the big dates. 60 days to the second day of the September Fed meeting. That's September 18th. That's when we're supposed to get the first expected rate cut, right? 108 days to the November 5th election. Those are in red on the calendar. Starting next week, Tuesday, July 23rd, 9:45 a.m. Eastern Time, we get S&P Flash U.S. Services and Manufacturing PMI. On Thursday, 8:30, GDP and initial jobless claims. But as I said, Deadpool and Wolverine early fan event, right? The SEC versus Ripple's rescheduled meeting happens on that day. Friday, the 26th, 8:30 a.m., personal income and spending and PCE. This is going to be the most watched PCE of the year. That is the Fed's favorite indicator. Deadpool and Wolverine drop all on options expiration day. But then Monday, the 29th, that's the day I'm really excited about. All the box office results will be in. Right before Tuesday and Wednesday, the FOMC meeting. So, could you imagine if we get a swan to fly right in the middle of that time window? Because that's exactly what I'm hoping for. Here's a fun one, guys. Kenny blew $45 million on his own dinosaur. This is what this guy does with the billions he steals from retail and institutions dumb enough to trust him with managing their money. He buys a stegosaurus for his living room. He's like a large, retarded child with billions of dollars at his disposal. I know some of you think I'm too hard on Adam Aaron sometimes, so as a show of good faith, I'm going to send Adam's son and new son-in-law my congratulations on their recent nuptials. Here's a pic from the reception for you to enjoy. And here's another image from the reception. Looks like things got pretty wild that night. That's Adam's son on the right and Adam's new son-in-law on the left. In all seriousness, Adam, mazel tov. I thought you guys might enjoy this piece from Investor Place, the shittiest place on earth, regarding the 3 stocks they believe are giving short sellers the biggest headache right now. Put up your dukes. 3 stocks battling short sellers now. These stocks battling short sellers are currently winning, but the fight isn't over yet. The mechanisms of short selling are often abused. Oh, no shit, Jeremy. Tesla. Elon Musk is facing off against Bill Gates in the short sellers battle. Trump Media and Technology Group. Fundamentals don't matter with Trump's backing. And then they end the list with Palantir. Palantir's growing corporate client list is an important weapon. These are 3 stocks to root for. Well, Al from Boston will appreciate this slide. I had to go to fucking Bangladesh to get this report. I guess the financial press doesn't want to cover this in depth. BlackRock link firm under scanner for shorting of Trump stock before assassination attempt. Austin Private Wealth faces scrutiny over filing before Trump assassination attempt. Company denies shorting 12 million shares of TMTG, cites clerical error. Controversy linked to conspiracy theories involving BlackRock and Soros. Stock price surge post-shooting, causing losses for short sellers. Okay, now let's do XRP. I already mentioned we have the rescheduled case meeting with the SEC on Thursday, July 25th, but I also believe a final conclusion is forthcoming any day now. Here's a headline: XRP lawsuit, lawyer targets Gary Gensler amid SEC's latest defeat. Lawyer slams Gensler as US SEC faces another courtroom defeat, with a judge dismissing its attempt to regulate corporate cybersecurity. This sounds like gravy. Let's read on. Under highlights, judge dismisses SEC's attempt to oversee corporate cybersecurity controls. Ripple community reacts, criticizing SEC Chair Gensler's initiatives. This time, a judge dismissed their attempt to regulate corporate cybersecurity, a move hailed by critics. For context, the SEC recently faced a significant defeat in its case against SolarWinds. A federal judge rejected the SEC's attempt to oversee corporate cybersecurity controls, a ruling that has widespread implications. The SEC had argued that it should regulate all internal controls of public companies, including cybersecurity measures. However, U.S. District Judge Paul Engelmayer dismissed this argument, stating it would give the SEC overly broad regulatory power. Meanwhile, the judge's decision highlighted the overreach of the SEC's rationale. He noted that accepting the SEC's argument would allow the agency to regulate background checks, padlocks for storage, water park safety measures, and password configurations. The judge's ruling emphasized that the SEC's authority should remain limited to financial controls and not extend to all internal safeguards. I would agree. I think Gary needs to get back to, regulating Wall Street and leave the crypto space alone. Leave it to the CFTC. It is not a security, and that's already been adjudicated. Hey guys, what can I say? You know how I feel about XRP. It has been my largest position and will remain that way. When your crypto project makes it to Bloomberg headlines, that means it now has Wall Street's attention as well. Settlement speculation pushes XRP in front of crypto rally. SEC sued Ripple in 2020 for selling unregistered securities. 4 long years, and I believe the best crypto project in the world is about to be set free. This is not financial advice. I am not a financial advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. At the time of this recording, CoinMarketCap has XRP at 0.5905, but it's all over the place. And for those that think they're late to the party, she's down 25.38% over the past year at these current levels. Due to all the recent excitement from the case potentially wrapping, at these prices the coin has advanced just over 20% this month and made a high of 0.635 cents, a nice move from that low on July 5th at around 40 cents. But the conversation on XRP always leads to how high you think it can go, and I can share my opinion without it being investment advice. I believe on the news of Gary finally leaving the courtroom, bleeding from his nose, vagina, and anus. The coin will take out all its previous highs, and I believe it can set a new high above its all-time high of 340 in January of 2018, somewhere between $3.50 and $4 per coin. But Uncle Frank, what about the guys out there saying it could go to 100, 1,000, or even 100,000? Well, guys, no one would be happier if that happens than Uncle Frank, especially after 3 years of Kenny, Adam, and Gary doing a Hollywood three-way on my portfolios. But let's do some math, keeping in mind crypto is not my wheelhouse, but I can appreciate what XRP can do and is capable of after using Swift for 30 years. Now, I want you to know, with a circulating supply of 55,909,481,874, if XRP reaches $8 per coin, its market cap will exceed Ethereum's. If XRP reaches 24, it'll exceed Bitcoin's market cap. If it reaches 44, it'll exceed the entire crypto world's market cap, which stands at 2.45 trillion at the time of this recording. Can it achieve these milestones based solely on winning the case with the SEC? Probably not. But let me answer in this way. From December of 2017, digital currency Ripple soars nearly 56%, becomes second largest cryptocurrency by market cap. Officially called XRP, Ripple climbed 55.9% to a record high of $2.23 Friday afternoon, according to CoinMarketCap. The digital currency had a market cap of $86.3 billion, surpassing Ethereum's $73 billion, according to the website. I would add that I will forever be impressed by Bitcoin's price performance. I also believe it's a horrible ambassador for the crypto space, and I believe XRP beats it in every other measurable way as a project. So this article proves that XRP has exceeded the market cap of Ethereum before. And I, for one, think it's a better project than Bitcoin in every possible way. For my last slide on XRP, I want to list the potential catalysts that could vault it to the life-changing numbers all of us are dreaming about. Number one, a huge adoption phase may follow the resolution of the case with the SEC. I can envision one central bank, one major bank, one nation, even BRICS nations, one after another, finally confirming they will use Ripple XRP for cross-border payments and to unlock that trap liquidity out there. Number two, Ripple is going to launch a US dollar stablecoin in 2024. Number three, Ripple is going to launch tokenized gold and silver on the XRP ledger in 2024. Number four, we may see multiple XRP ETFs coming out in 2025. I think they'll be bigger than the Ethereum and Bitcoin ones. The main reason being the price point. Bitcoin and Ethereum already had their day in the sun. Now it's XRP's time. 5, and finally, the Ripple IPO itself, which I'm hearing is on the back burner for now. I even heard Brad was buying back pre-IPO shares for double what people had paid for them, but I haven't confirmed that. Anyway, one day Ripple will go public, in my opinion, and I'll be in line to join that IPO. It can only help XRP. Not investment advice or advisor. Now, since everyone wants to know what I'm doing, I'm long AMC Common, of course. I'm long the 550 calls expiring August 2nd, and I'm hoping to sell them into strength around Monday, sometime during or after the Deadpool Wolverine weekend, on a rally, unless Adam kills the rally somehow. My hope is now that he's pulled over $100 million from the company, maybe he'll give the shareholders that saved the company some consideration. I'll be looking to add the proceeds to XRP and Archer Aviation. Last but not least, I'm going to cover Archer Aviation. That's the daily on your screen. It closed Friday at $4.64, down 19 cents or 3.93%, but still above its 50-day moving average of $3.61. Its 200-day moving average of $4.37. Yes, down 8.12% for the week, but still up 48.72% for the month. The shorts pushed it under 5, 3 red daily candles in a row, even though millions were flowing out of big tech and moving to small caps. And this is following news that on Tuesday, July 16th, the company received approval from California's Alternative Energy and Advanced Transportation Financing Authority for its $117 million project covering the planned expansion of its advanced manufacturing facilities in the state of California, including the ramp of its advanced electric powertrain facility as it readies for commercialization. The CAE-ATFA sales and use tax exclusion is expected to result in $10 million in benefit to Archer over the next few years. So I put a red arrow pointing to the day this great news broke. This follows news of deals with United Airlines, FAA certification, news of a deal with Southwest Air, news of Cathie Wood buying more of the stock, news of Stellantis buying more of the stock. Keep it up, short sellers. I want you to. I'm convinced you'll be burned by this trade harder than any other this year. Not investment advice or advisor. I would like to point out to the shorts, institutional ownership on Archer stands at nearly 50%. This is not Mullen or Hycroft you're fucking around with. So let's compare basic stats, starting with Archer. I've got short interest at 50.2 million shares. Short interest ratio, 5.23 days to cover. Short interest as a percentage of float, 24.38%. Off-exchange short volume, 2.2 million shares, and off-exchange short volume ratio, 62.09%. That says it all. Whenever the shorts get caught over their skis, they start misusing the dark pools. Archer has a short squeeze score of 76.66 out of 100. Moving to AMC, short interest, 53.8 million shares. Short interest ratio, 3.82 days to cover. Short interest as a percentage of float, 14.68%. Off-exchange short volume, 1.99 million shares. Off-exchange short volume ratio, 42.10%. AMC currently has a short squeeze score of 64.33 out of 100. Moving to Cinemark for comparison. Short interest, 26.9 million shares. Short interest ratio, elevated, 10.18 days to cover. Short interest as a percentage of float, over 25% now, 26.98%. Off-exchange short volume, 419,000 shares, and off-exchange short volume ratio, 49.3%. Cinemark currently has a short squeeze score of 71.04 out of 100. Ask yourself this question: why do Archer, AMC, and even Cinemark constantly appear on this report of large market on close stock order imbalances? How does this escape the attention of the SEC or FINRA? How long will these agencies let the mountain of evidence build, consisting of open spoofing and layering, naked shorting, vanishing FTDs, misuse of dark pools, the halt system, and obvious hit pieces in the financial press continue before they act? Hit the like button and share this on your social media. Do your part, please. And I've got one more kick in the balls for you guys before you go. This is from the Wall Street Journal back in 2016. But this is just one more technique they use to beat retail, and I want you to know about it. Tiny satellites, the latest innovation hedge funds are using to get a leg up. Yeah, they need a leg up. They've got every advantage known to man. They can break every securities rule and law with impunity, but they need one more leg up. The latest tech innovation for data-hungry hedge funds is a fleet of 6 shoebox-sized satellites. A company called Planet Labs has launched a small constellation of what it calls CubeSats that can deliver much more frequent imagery of economically sensitive spots than traditional satellites. Those spots include retailers, parking lots, oil storage tanks, or farmland. The company, founded by 3 former NASA scientists, has now signed an agreement to supply data to Orbital Insight Incorporated, which mines satellite imagery for trading tips for hedge funds. If you think they haven't been monitoring our theater parking lots to get ahead of the box office, you're crazy. I hope these satellites pick up 1 billion cars from people going to see Deadpool and Wolverine next weekend. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.